Yo, what's up, everyone? My name is Mark, and this is my co-host.
Mo from OTP Clubhouse.
Yeah, we're gonna give it about 5 minutes or so, let people, trickle in. As you guys know, it's actually the worst timing mode because right now Netflix is actually having its earnings call, which is odd to do it at 6 p.m. But I mean, it is what it is. They already put out their guidance and everything, so we're gonna cover that on Hot Take, by the way, everybody, while people slowly trickle in.
I
How
think
was your week?
I have an app called I'm trying to look for it. I think it's called Earning and it's called Earnings Calls. So Earnings Calls, you could download that. So the recorded version should show up tomorrow.
Okay, perfect. Yeah, that sounds cool, man. How was your weekend overall?
It was good, man. Weekends go by so fast now because there's so much to prepare for the week. There's too much happening. Like before, we only had to worry about the US. Now you got to worry about what's happening in Ukraine, then China, then
Hmm.
Europe, and everything that BOE is doing. So, yeah, you got to learn some new stuff now.
Yeah, it's gonna be crazy. Also, by the way, guys, if you tune in on my channel, Trading with a Dummy, I'm only gonna go live on this for 10 minutes. Switch over to Money Market Truth. Please go over there, subscribe, like, and share. Because we drop these episodes every Tuesday. And I think we're gonna start doing these lives more often because it's just a lot easier, get straight to the point. I think we've done this enough now that we pretty much come prepared, no editing really needed. So it definitely helps. So make sure y'all switch over to Money Market Truth if you are on my channel. Oh man, yeah, my weekend, man. Did you see the new Creed trailer that just
No,
dropped? Creed
I
3?
haven't. No, I haven't.
Dude, yeah, it dropped like 4 hours ago. I was a little disappointed, man. Rocky's not in it. So at all.
Dude, for the weekend I was watching a show called The Watcher.
I
Um,
just started it. I fell asleep on it last night. How was it?
it's really good.
I gotta check it out. Netflix, man.
Yeah.
Netflix. That's gonna be a topic for day two on the hot takes for sure. Everyone who is tuned in, I just want to say thank you for everyone who was supporting. If you're like one on my channel, Trading with a Dummy, thank you for supporting. For anyone who donated to my family, as some of you guys know, I had a cousin that passed away really young. I'm just gonna leave it at that, and it was a very hard weekend. Probably one of the hardest funerals I ever had to go through, and it was pretty crazy. So it was a rough weekend. And then I was also sick for the past 3 weeks. I'm still slowly recovering. I'm like 80% there so far. So it's when we tell people what I got, Mo,
What?
should I tell people what I got? Dude,
Sure.
my illness, I got a virus, y'all. I caught mono. Who the hell catches mono at age 40? If you're unfamiliar with mono, that's like the kissing disease that teenagers get from like 15 to like 19 or 21 because they French kiss all the time. And it was funny because I went to the hospital, I wasn't getting better. And so I went to the ER after like a week and they tested me. They were like, you got mono. I had no idea what it was. And then called my wife and I was like, hey, I got mono. And her first reaction, who the hell are you kissing and making out with you? She started tripping out. But then come to find out there's other ways you catch it as well. My kids can apparently catch it and they don't have any symptoms. And my
Yeah.
son always tries to share like my drinks and stuff or utensils with me. So I probably caught it from him. Who knows? But I wasn't like cheating or anything. But best believe, I'm sure my wife went through my phone, my Instagram, my Twitter, everything. I'm sure she went through it at one point or another. So it's crazy. But yeah, mono. Well, all right, let's get into it. All right, what's up, everyone? First of all, thank you for stopping by. Like I said, my name is Mark, and this is
Mo from OTV Clubhouse.
yeah, we do this weekly, y'all. Weekly. Y'all should definitely come by. There's no paywall if you're brand new. Thank you for stopping by. And of course, seriously, share this. We're at 350 subscribers, I think, now, and we're slowly growing, but we're trying to get to at least 1,000 by the end of the year. That's our goal here.
Yeah.
But yeah, so we're gonna start off today with some hot takes. Obviously, the first one is going to be Netflix. Netflix had its earnings after hours. The stock completely jumped up. It was very, very unexpected. Let me see where it's at right now. It is at 13.80% above where it closed. So it obviously the guidance it hit everything that we were expecting. I didn't get to look in all the financials yet, but it looks like they definitely beat on almost every aspect. It looks like, right? I'm still waiting for the earnings call right now, but it looks like they released some information that was very positive. You have any more insight on that, Mo?
Here, let's just add it to the stream here.
There you go.
So Netflix Q3 key metrics, the earning per share. Not sure why it doesn't say that, but earning per share they beat by $1. They missed the revenue. But what's really good is look at their guidance. This is what me and Mark were looking at. They're expected to gain 4.5 new subscribers and 1% gain in revenue and operating margin at 4%. This is really good. At times like these, it cannot get better.
Yeah, and this is strange to me, man, because like I know they were talking about pivoting from just having the 2 tiers that they have or 3 tiers, and they're going to start having the ad version, right? Which is going to be like around $6.99. But they talked about this 2 quarters ago, so I don't know why this is like is acting. People are acting like this is brand new information, but I see nothing that fundamentally changed from last Q3 to Q4. I mean, I see that they're showing all this other stuff. I mean, the numbers, the revenue and stuff is not that impressive, but their guidance is really extreme. It's point 0.4, like you said, 0.45 million. That's insane. And I'm curious. I wonder. I don't know if you know this, Mo. And I never really looked into this, but this is a question that I had. I wonder if you unsubscribe, let's say on Q3, and within between Q3 and Q4, and you subscribe again, do they count that as a new subscriber?
It would. Can I tell you something? I don't
Sure.
want to say it, but I'm pretty sure they're doing what's called sandbagging. So I'm not going to say the name of the company, but I once worked for a company. Basically, they used to report subscribers too. And the last day of the quarter, the VP called me and said, "Mo, can you do me a favor? Can you not move? Can you move the cancellations to tomorrow, all of them, so it doesn't show up on the report?" And they did that so they could hit their numbers. And like you said, fundamentally, this is nothing. Nothing's changed. Personally, I got into Netflix puts. I got into 200 puts for next week. They're probably going to open at zero tomorrow because what is Netflix at? Let me check.
It's currently I
At
could
274.88. I am going to add more puts tomorrow. I'm probably looking at 250-ish puts, depending on where this fails. In this environment, there's no way this sustains. And I was telling Mark, sometimes what happens is when everyone is on one side, if you saw the flow on this thing, it was all bearish, right?
yep.
You like I saw a 240K put come in for December, and I can tell you that they're gonna make money because this thing will go down. I think last week there was something with Moderna and it was up 10% and it gave back all the gains. We're in a very weird market right now. Like Apple, I reported that they had iPhone 14 cuts. This was 2 weeks ago.
Yep.
They reported they recycled the news again and it was down. And it's just algo selling. And the moment it went down, we started getting into calls for SPX. And right, for sure, what happened was it bounced right off. And this is like stuff that we're seeing more now. Something similar happened in 2020, but this stuff is happening more and more now. But fundamentally, nothing's changed for Netflix. So
Yeah.
I think they're going to give back everything.
Yeah, and best believe too, since typically, since Netflix had good earnings, which means that probably Warner Brothers, Paramount, and Disney is probably going to go up as well because it's typically like a sympathy play, right? That's what they
They
call
are up.
them. They're usually because they're all in the streaming services, so I wouldn't be surprised if they end up going up short term as well. Let me go see what
Disney's up $3.
oh,
98
yeah,
was 98. It's at 101.60.
yeah.
Roku should be up to. Let me tell you what Roku's
Let's see,
at.
Roku is currently at also up 4.73%. Wow.
Yeah.
So that's up after hours. So yeah, $2.52. Paramount, let's see where Paramount is at currently. So this is a trick for everyone who's interested. Typically, like if you have stocks that are in the same similar sector, if one reports earnings that are good, you'll see that the other companies that are in that same sector end up going up as well. Paramount's not moving too much. Oh no, Paramount also 2.5, a little over 2.5%. Let's go see what Warner Brothers is. Warner Brothers is up almost 2% after hours as well. So yeah, this is interesting to see. Yeah, fundamentally it hasn't changed anything. So I'm just shocked. I mean, obviously they had Stranger Things over the summer, so that was a massive hit, and the TV show Dahmer, which was an amazing show, was also a hit. So, but other than that, there was nothing that changed fundamentally. So I'm really shocked at the fact that this actually beat earnings like crazy and is skyrocketing right now. FOMO 275 right now. But then again, I was a guy who, when I first started my channel and trading with Dummy, I said Netflix is going to $1,000 when it was at 700. I did a whole episode on it, so I was way off on that.
No, well, so it's good that you think like that because as long as you're following the trend, it's okay. But like when the trend broke, the long term, the daily trend, if you were bullish then that's where the problem is. We should be able to change our um, vision, our ideas, our thoughts with the market. People that get too stubborn, they're the ones that get taken out. Me and you've talked about it several times. There's people big following, they're still saying buy, 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 buy. It's been 6 months of buy, and now they're just quiet.
Yeah, or tomorrow, I'm sure they're gonna brag and be like, "I told you guys to buy because we possibly hit the bottom." Right? That's gonna be the
Yeah.
whole conversation. But I also saw that Netflix also said, I don't know if it was CEO or whatnot. He specifically said that it looks like the slowdown has reversed and they're no longer trending downwards. They see revenue growth moving forward. So we'll see what happens from there. But yeah, let's play a game, Mo. So I want everyone to participate if you want to. Again, I'm going to cut off my stream here on my personal page. Again, guys, go over to Money Market Truth if you don't mind, and come and support, please. So let's go over to the earnings. So you guys are more than welcome to participate. Me and Mo is going to play a game this week, seeing if we believe it's going to hit or miss. So what are we going to start with? I will say this. I'm kind of shocked that Hasbro's did miss on earnings today, and it went down quite a bit. I like Hasbro's as a long-term investment. I haven't invested into it yet or anything, but long-term, I think it's fine. It's a toy company, board game company, and everything. But yeah, let's go to ASML. What's your thoughts on that, Mo?
This is a chip company, right?
I believe it is, yes.
I think they go down. Let me pull the chart quickly, but I think they'll go down. Chips aren't doing good.
Yeah, and that stock is pretty expensive. It's $398, and it is
It gapped up right now. It's 404 right now.
Yeah, because I'm pretty sure it is a chip company. I'm not 100 what's in the cards. I believe it is. Yep. So that one is up pre-market 5.65%, which is crazy. And then what's the next one do we have on the list? Ally.
I saw the flow and I messaged in the Discord, but I don't want to add any more. If I'm playing an earning plays, I only play one at a time. Ally had insane amount of November puts, like I mean insane.
So you think you think it's a miss?
Yeah.
All right, I'm going to say on this one, I think it's actually going to hit. I think it's going to go up because it's the bank. From my understanding, is Ally as a bank is seeing that the earlier banks reported already. They all did pretty well for the most part. They had a nice little run up, so I'm going with a hit on that one.
They do subprime. They do subprime for auto, so just know that. That's why they're.
That is true. Yeah, I remember I used to have them back in the day as a company, but I still think they may hit. We'll see what happens on that one. Are you familiar with what else are you familiar with on here? Are you familiar with Abbott?
Not. I don't play that. I did buy puts on LRCX. I have 300 for next week.
For
Lamb research.
A research, but Abbott is that's medical devices, so that's an
Abbott medical. Yeah, it's ABPT.
So, yeah, I think that one is going to hit. I think it's going to be good. It's going to have good earnings. You think it's going to have bad earnings or good?
I have no clue, man. I don't no clue.
All right, Tesla. That's the big one. What do you think about Tesla?
The thing is, man, Elon's going to be there, and I don't know what he's going to say. So it could be if Elon's there and he tries to pump up the stock, it could be numbers won't matter.
All right, I'm going to say on this one, and I'm usually always wrong with Tesla, but this time I'm going to go with I think they're going to beat earnings, and I don't like Tesla. I'm a Tesla bear. I think they're going to beat earnings this time around again. They seem to always do it every single time, so I wouldn't be surprised. Even if it's just like by minor, there's going to be some sort of guidance that's going to impress people. So we'll see. Lamb research, did you say miss?
Yeah, I have.
Yeah, I agree on that. I think Lamb's going to miss. Then we got Thursday, AT&T. Miss or hit?
Let me check. What do you think? Let me check the chart.
I think AT&T is going to miss.
Yeah, like people, I think the consumption for like not cell phones, but I don't think people are just adding anything new anymore. And Like usually when we get into when times are tough, I hope you know cell phones overages. That's where they make the most money, and people become more smart. So think I would honestly say miss for everything except Snap. But yeah.
Yeah, American Airlines I think is going to have a hit. I know they've been struggling a lot when it comes to flight cancellation and stuff like that. But I was looking at the travel sector and stuff, and it looks like people are still spending a lot of money on traveling. So I would
So
expect for it to hit.
Mark, if you want to book a normal 5-star hotel in downtown in Vancouver right now, the going rate is $2,000 per night. Everything's booked. So, and that's usually the case. And I just went to Dallas and I took American Airlines. They were fully booked. I think travel is hot sector. So, airlines could do well. I don't know what their PE ratio is. I don't know what their burn rate is. We'll have to look at that. I think American Express does well. Snap does well, but that's my opinion. I'm not
I'm,
playing anything.
I'm surprised you said Snap. You think why do you think Snap's going to do well? I actually think they're going to miss again.
Dude, Snap has a lot of leaps. They've been coming for the last 6 months, and someone's accumulating it. And I don't know what they think they know, um, but we'll see. But travel, yeah, I agree with you guys. Travel is crazy. Like, just buying. I'm buying for tickets for Dallas and Mexico again, and they're really pricey again. Yeah, the oil gas price went up, so increase in cost. But do you remember initially when COVID hit, they were saying that we're gonna lose on earnings because we're spending a lot of money for COVID, like
Yeah.
hand sanitizer, masks. I don't know if you know this. If you've traveled, you know this. No one's wearing mask anymore. You're not
Yep.
required to. They're not following any of the COVID. So I think their expenses so guidance should be good because all that extra operating expense is going back in their pockets.
Okay. And then, well, so we'll see how that one plays out. I'm curious because we're two different opinions there for Snap and, but yeah. And then the last one, Verizon, I think is going to probably also miss, in my opinion. American Express, I think is going to hit.
Yeah.
So, all right. So we covered that. That's our opinions. We're just playing a game there. We're gonna track and come back next week and see how we did on these earnings to see if we were accurate or not. All right. On to the next hot take, which we're gonna cover here real quick, is gonna be me. I'm gonna cover on Ukraine again, Ukraine and Russia. I don't know if you guys have been keeping track with it, and it looks like Elon is now involved in this whole thing as well with Starlink, talking about how he can no longer support Ukraine with Starlink. Then he changed his mind. I don't know if he's being sarcastic or not in the tweet or whatnot, but I know they've come forward that he's been doing this stuff for free, right? He's been supporting them with Starlink, with internet and technology, whatever, for free for the past couple months. I think he spent over $100 million so far of his own money to support this. But obviously, there's also a lot of drama going on with Elon Musk, Russia, America, and all this other stuff. So we'll see what's going to happen there. But this is the reason why I'm keep talking about Russia and Ukraine, because this is the macro picture. Once again, we have to think bigger when it comes to the economy, because the economy will directly affect the stock market. I feel like I'm pretty well versed when it comes to the government, military, because I worked in the industry for 15 years. And what I'm realizing here, and this is actually, I'm glad that Tulsi Gabbard, she went on Joe Rogan over the weekend or like a week ago. I just recently listened to the podcast, and she pretty much said everything that I was thinking publicly, which is, you're not supposed to do, especially at one point or another if you were in the military. But this isn't really a Ukraine and Russia war. This is an American versus Russia war, where it's a proxy war. We're just using Ukraine as chess pieces to fight this war and beef that we have with Russia. Problem is now that Iran is also now involved, supporting them with these kamikaze RPA planes and etc. But looking at just the reason why I always come back to the Ukraine war, because we're spending a lot of money in supporting this war to the point where it's getting a little out of hand and it's getting ridiculous. And I've also noticed that for us to support as American, like the consensus of people feel supportive for a specific country like Ukraine, or poor Ukraine, poor people. This is a travesty. We cannot believe this is what happened. Russia is bad. We are more willing to stand by on the sidelines and allow the government to continue to spend money on a consistent basis. But we don't do that for us here in America, which is kind of insane. But this is really a proxy war. The problem is that we're seeing more and more people talking about what they believe the outcome was. Okay, so I was covering the Ukraine and Russia war all the way up until May. Then my job switched, and I no longer covered Ukraine and Russia, which I was perfectly fine with. It was a very hard war to cover because there was a lot of misinformation and information I wasn't receiving. Problem also was that what I noticed during this entire process is that the narrative was already built that Russia is the enemy, which of course, they are, but Ukraine is this innocent, poor country that we need to support by all means necessary. However, what we learned during this entire process, once Russia did fight Ukraine, is that everything that I learned for 15 years that we were expecting for this war to play out. I don't know if you guys recall, I said this war is probably gonna last 45 days. That's what I said. I was like, Russia will probably come in there, something will happen, it will last 45 days, and everything will go back to normal. Absolutely not. Russia completely dropped the ball. Everything that we thought about Russia was completely wrong. They were unprepared. Their military equipment was falling apart, their morale was low, everything was just completely opposite of what we were taught in the military for years. Now moving forward, again, once again, we are the ones who are supporting Ukraine in this, and I'm going to pull this chart up real quick so everyone could see this as well. This is how much money we have been spending when it comes to Ukraine compared to all these other countries. Now if you look, we spent about 27 billion, this is billions by the ways, and we just spent, I think it was like, we gave them another $4.5 billion last month or so. So this is included in there. So $27.5 billion we spent on military support, $9.5 billion in humanitarian, and $15.2 billion in financial services. You see all these other countries are not even chipping in as much as we are. Best believe this will continue to grow and grow and grow. And like Tulsi Gabbard was saying on the Joe Rogan podcast, which I thought was very interesting, is like, this administration didn't come there with any diplomacy. They didn't want that. It just seems like, which is like, we're going to come there and we're going to support them. We're going to crush you. If you do this, we're going to do this. If you do this, we're going to do this. The problem is, this isn't a Middle East war. We're not fighting people in the desert. We're not fighting this guerrilla warfare type of fight with individuals. We're fighting a country that legitimately has nuclear weapons. They have nuclear weapons that they could possibly use. And just from the history and things that we know about Putin, he's a person who will not take an L. And I think people need to start realizing or understanding that, yeah, we may not be directly affected right now, but our economy will be affected by that. But Ukraine and Europe could possibly be affected in a bigger method. But if he decides to go to the nuclear route and we're not de-escalating the situation, things can get extremely ugly. And Tulsi Gabbard was saying she believes that there could be a chance that there will be World War III. That's what could happen. And we're seeing now that Iran is now inserting itself into this situation, and we're not de-escalating this at all. There has to be a situation where Russia feels like they win something and Ukraine wins something, or America wins something. And if that doesn't happen, this will continue to go down a dark path, which I think people should really start thinking about before they constantly scream, yeah, I give Ukraine more money. Yeah, poor Ukraine. Let's support Ukraine. This is really a proxy war. This is us against Russia because we don't agree with what they're doing and they don't agree with what we're doing. That's really what it is. And all these innocent people are being caught in this war again. Then you have Robert Kawasaki, the guy from Rich Dad Poor Dad. He recently did an interview with Valuetainment, which I loved, and he was talking about the outlook of this country as well. He thinks that, like everyone else, that the macro picture, right? We're going to hit a recession. The economy is going to get worse. Stocks are going to go down even further. But he was saying, which I thought was very interesting, and again, he could be wrong. I know he's always, gloom and doom, but he said specifically that he thinks worst case scenario, especially stuff that's going on with Trump, we're going to have a civil war here in the United States, one way or another. Best case scenario, we're going to hit depression. So that was his outlook. Bill Gates said that he believes we're going to also have a civil war here in the United States. So to see that, to believe that the economy is turning around, things are getting better right now, I think it's just propaganda pushed by the midterms right now, just so you can get the votes or act like everything's fine. But we can see that things are still ugly. I'm still not very confident that the market's going to turn around, even if we have great earnings here. I think it will be temporary. So that's my 2 cents on that. Do you have anything you want to add?
Not really. You covered everything.
Yeah, man, it's gonna get more. We're gonna continue to spend money. Crazy part is, if you really think about it, imagine if we just spend this type of money on our own people here, schools, education, infrastructure. technology, innovation. Be amazing, wouldn't it? But no, we end up fighting about that stuff. But when it comes to war, military and industrial complex, we're always about giving them money because one way or another we're gonna profit off of it. So, but yeah, that's all I got on that hot take. So, and then yeah, so and then we guys came here for what we talked about. We're gonna talk about real estate versus the stock market. Mo, do you want to start? Because you went out to Texas. Go ahead, tell people what you've been doing these past 2 weeks since you've been.
So we've been talking about recession, I think, since January, on the podcast, right? We started around Jan, or no, we
No. You came out here. No, I
March,
think it was a little
April.
bit further. I think it was May. I think it was May, dude. Because you and
May?
I, we were
Okay.
drinking. I think around March. We were drinking
Okay,
together
so
around March. Yeah.
So May, we started talking about it, and then basically most people were skeptical. Now I think people are buying into it. I saw a video by Gary Vee. Gary Vee was saying you should be thinking about it, thinking twice if you're making any big purchase, house, car, all that stuff. I think they're now spreading fear, which is also not smart. I don't think we should be fearful or greedy. You got to just say, look at your situation where you're at. Some people could actually benefit from where they're at, but that's what I'm doing. So I follow a lot of people that are into real estate and buying small businesses, or they call it boring businesses, and started looking into real estate and did some research. The place that I live in, Vancouver, a tear down house here costs close to $1.2 million Canadian. So the currency exchange rate is about 30%. You are 30%. US is 30% higher. So 1 million would be a good estimate. 1 million US dollar for a tear down house, like a rancher here. So I'm like, okay, let's go look. So that's why I went to Florida in March, had a look. Things look really good there as well. Then went Dallas last week, and I basically had a little bit of skepticism depending on how far real estate can go, because people are going to buy houses and it is a limited resource. But when I got into Dallas, I'm now more sure that this bubble is going to get blown, because builders in Dallas are just getting started. Like the complex that we looked for builders, they were building, I think, about 2,000 houses there. Most builders in Vancouver are not building any new houses unless they've taken the deposit. If they haven't, they're just closing down the projects. Whereas Dallas, they're taking new projects. And like a house in Dallas, the area we were looking at Prosper, Salina, Frisco, they've doubled in 2 years. So a 500K house was a mill. And the builders are selling houses, brand new construction, for 850, and they're basically guaranteeing customers that it will go up 1.2 to 1.5 within the next 6 to 8 months. And what my family was telling me there is, in the past 6 months ago, if you needed to see a builder, you needed to do an appointment. Now they're doing, anyone can walk in, and I could tell you that we were there for 4 hours. The 5 builders we saw in total, there were maybe 5 families. And people don't see that. I posted a video about The Big Short, and they talk about how aggressive banks got to make more money and how that backfired. We're not in that situation, but this looks really bad. People are over leveraging at an interest rate of, I think it's 7.2% in US right now. They're over 5. Sorry, no, that's Vancouver.
I think it's 6.25% right now. If you have 650 above.
So two kind of people get screwed. One, people that got variable interest rate in 2017-ish, and their 5 years is ending, and the new people that just got the house after the interest rate started going up. Those are the ones that are going to get screwed. And then we have foreclosure that may happen. It's the same logic. Mark bought a house from me for $1 million. Out of the million, he only put 200K. 800 was from the bank. The house goes down to 500K. Mark is like, fuck this, I'm not paying it. I'm just going to abandon the house. House gets foreclosure. I think we get the same cycle. If you guys think I'm crazy, you can watch the podcast from start. We've been saying that the market will go down. In July, when the market was creating the highs, we said come September it's going to drop. So it's very, very logical if you look at what's happening in the macro. If you don't understand the macro, it's easy to give in watching 4 or 5 videos of these influencers saying this is the best time to buy. Do you remember in July seeing Insta story saying buy now to fight inflation?
Yeah, talking about the housing market and stuff. Yeah, and how like a
No,
lot.
no, housing market, house realtors are saying that right now. But do you remember people saying buy stocks in July, like
Oh
buy
yeah,
stock?
yeah, 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 yeah,
So
yeah.
that's what realtors are doing right now. We're in the January stock market right now. You're going to see what happens here. I think by next March, it becomes more clear, and all the way leading to next September, this gets way worse. And Mark's absolutely right. Right now, the elections are happening, so it's everything's rosy. White House said that they don't think there is a recession coming today.
Yep.
They said that soft landing is possible. This is BS that they're feeding us. It changes once the elections are over.
Yeah, I mean, look at what Biden was asking Syria to see if they can postpone OPEC for a month because he wanted to make sure that their midterms would occur first, and they said no. So that was funny. No, but let's talk about when it comes to the real estate game because you are looking at real estate, and between the two of us, a lot of your wealth and your family came from real estate investing, right? We talked about that.
Absolutely. Yeah.
On my side, it didn't, right? I own one house. I've owned multiple houses, but I only own one house. I wish I've kept the other houses.
Yeah.
Let's talk about it because I know you're gonna see a lot of gurus coming up now saying, have the real estate courses or whatnot. And the question now is, um, what's better, real estate investing or stock market investing? What's your belief? And I'm gonna give you my belief as well because I did some research. But I want to know like because they're both going to go down one way or another. But I know people are now saying you should have invested in real estate. This is the time to buy real estate because the stock market is going to go down. Real estate's better. What's your thoughts on that?
If you ask me right now what's better to buy, I would say stocks. I wouldn't touch real estate right now because it's expensive. But in terms of where you can make more money, it's real estate for the simple fact that you can leverage. So the laws in Canada change now. Now you have to put 20% down. Back when I came migrated here, I think it was 5%, and the government would loan you 95%. And that's why I like options, because you don't need a lot of amount and you're leveraging stocks based on options, so you can get similar return, but you're not going to hold $1 million position on a house. Like, just to give you an average, like a house, and I'll talk Vancouver, and I'm sorry, you could talk about Florida because it'll be more relatable, but a house in 2005 here was about 300K. It pick fucking any area, pick anything. That house right now is worth 1.4, 1.5 million. So if you held it for what do you call 2005, about 15 years. But the thing is, you weren't really putting 300K down. Back then you only had to put 10, 15 down, and you don't need any credit back in those days, because if you came from a different country, you didn't even have a SIN number. So looking at that, when I say 300K became 1.5, I'm realistically saying 5 or 10K became 1.5 minus the what you board.
Yeah, so you're saying that you think that I mean, but overall in the overall picture, not right now. Obviously, right now stocks would probably be the smarter move, right?
Yeah.
I'm saying the overall picture, like someone who wants to be an investor for like long term. Do you believe that still stocks is over real estate?
In terms of risk reward, yeah.
Oh, okay, interesting. Yeah, because so I did a little poll on Instagram to see like what people thought real estate or stocks, and they chose stocks. It was 60% stocks, I think 48% real estate. But I was doing some research, and like according to like Bankrate.com, there was a study that showed that about 29% of U.S. adults prefer real estate um, for like a long term investment, like people who don't need the money within the next 10 years. So, and then they said that before last year for stocks is only 16% of adults believe that stocks was a good investment. Now in 2021, that jumped up to 26%.
Yeah.
So now it's currently it's 26%. So it's very interesting. But I know I've seen arguments on both sides where people are saying, real estate is a better investment than the stock market, et cetera. And it has some pros and cons I want to go over as well. But I was looking at the historical 60 year on average. The stock market actually returns only 10% versus the real estate market, which is 4%, right? But this is the thing. I was looking at Investopedia, and they wrote a whole article about this, and they were actually showing that from 1990s to 2006, which was known as the Great Moderation, we actually saw a massive surge in home prices. So for years, 60 years, yeah, historically, it's only returned 4% year over year. But now it's gotten to the point where real estate is actually catching up to the stock market. And we don't really have enough data to really prove if the current state of real estate, if it really is only still returning 4%. Because if you think about it, I mean, if you bought a house, like you said, in 2005, or hell, even before the pandemic, your house either doubled or get close to doubling in price. I know my same exact house was selling a couple months ago for $680,000 in my neighborhood. So um, that's just insane. And there's a lot of pros and cons when it comes to both. I personally, I think there is no one way to invest. Obviously, there's pros and cons on both sides. What's up, Tim? Um, One of the things like I noticed like when it comes to real estate, right? Some of the pros that I wrote down is that you can sleep at night, right? It's not a risky it's not a risky move, right? Like you said, even like your family, they were heavily into real estate. My other friend who was also from his family comes from India, also real estate. Like it seems like generational wealth, a lot of generational wealth was really built upon real estate and land. So I was thinking about that as well as the possibility that you could actually have passive income, with real estate. You could have the tax benefits are amazing, especially in the US. I don't know how it is in Canada. If you guys are able to write off a bunch of stuff, are you able to do that for taxes?
We could. One thing I want to correct you is the rate that you get on stocks versus real estate is irrelevant. What's relevant is leverage. Like, does that make sense?
Yeah. So in that case, I would actually say I have under my pros, I have leverage with real estate. I have more leverage with real estate versus the stock market. So, because you could, again, take out a loan against your house, you could take out equity and et cetera. And not only that, but like, again, it appreciates over time, and you could have this passive income because you could rent it out and you could have some sort of income. And then, everybody always needs a home. So that's never going to be something that's going to go away. Not everybody needs stocks. Not everybody needs to invest in the stock market. And then also, like obviously, with real estate, it's a tangible asset. It's something that you can physically visit and see. But then there's also the negatives. Do you want to go over the negatives at all?
Yeah. So back when we needed money at some point because we're buying another property, real estate is not liquid. Like, if you, depending on what you, like, if you have a below median house, sure, you can sell it. But when the market, I think around 2010, selling a house, it was
It was
taking
hard.
average 4 to 6 months. And what do you do at that point? That's when foreclosure happened. But stocks, you could, no matter how much your stock is down, unless SEC closes it, the liquidity is an issue with real estate. So the market's good right now, so houses are selling. People saying, "Oh, you could just lower down the prices." When the market goes down, it doesn't matter. You're going to see 10 houses on sale in the same neighborhood, and none of them are selling, and price isn't an issue anymore. People just aren't going to buy.
Yep, and again, it's all about supply and demand as well, right? So, like one of the negatives I have as well, because I know it always sounds, and this was always my worry. This is the reason why I always sold all four of my houses because I was just always nervous for these reasons. For one, tenants, right? There's certain states, and I think Cali is one of them for sure, where a person can be a squatter and not pay you, and you can't legally kick them out. Like if you don't pay rent, like you can't legally just kick them out. You have to go through this whole process of getting lawyers and taking them to court. And there's multiple states that adopted that law, and it's ridiculous in my opinion because that falls on you now. And you have people living in your house for free. And then what happens when you do eventually kick them out? They're going to destroy your house. So you got to end up, fixing it up. Obviously, housing crash is a major part. We saw in 2008 to 2010. Um, Maintenance. So when you buy a house, that's always money that you have to continue to put into the house, whether it's AC's breaking, the refrigerator's breaking, the dishwasher's breaking, flooding, storms, roofs. There's always issues when it comes to holding on to a house. So you have to constantly invest into it. And then, of course, certain areas, right? Areas can change. You remember Detroit, Michigan, when it was booming at one point? They invested all this money into Detroit, Michigan, and then the state basically went bankrupt. The city went bankrupt,
Yeah, I heard about it.
and now they have like a whole bunch of homes that are just abandoned and it's not worth anything. So that's another worry. And of course, like you were saying, that with stocks, like if you need money right now, you could liquidate your portfolio and get the money. You can't do that with real estate. So that was one of the things I had. And then when it comes to like the negatives on stocks, obviously it's a tax, right? the tax implications. With a lot of people not holding stocks over 1 year or selling consistently options, SPX has better stock advantage. I mean tax advantages versus you just buying stocks because you pay a lot of taxes, right, Mo? When it comes
On
to
stocks.
when it comes to stocks, yeah, because
Yeah,
you
yeah.
do
It's
always trading and stuff. So
straight. Yeah, because everything options all under 1 year, so it's all short term. So you're
yeah,
getting capped at short term.
yep. And then obviously the volatility, right, with the stock market. You never know. That's like you have no actual control over the volatility, and you have no say in the company. We have a little bit more say in real estate, but you know the perks of the stocks. Once again, you have an opportunity to grow. It has massive growth opportunity, but it also has massive losses, right? A lot of people, like you say, who put their money in growth stocks are down 70, 80% right now. But the barrier to entry is way cheaper. Like you said, right? When it comes to buying homes, depending like what your status is, conventional loan, VA loan, etc., you have to put a certain amount of money down, and typically it's 20%, right? Again, I'm not a guru when it comes to the housing market. I don't know everything, but my understanding is typically you have to put a pretty large lump sum down to be able to buy a house.
Yeah. So you don't have to. If you don't, you have to. They'll make you buy life insurance in Canada. So it would be a term insurance. So if in case something happens to one of the partners, the insurance covers it, but the insurance makes your mortgage goes way higher.
Yes, we had that in Florida. Not every state has that, but in Florida it's called PMI, I believe, and that could be a lot. And that's for like an extended amount of time, 10 years or so.
Yeah.
So it's pretty crazy. Um, but again, stocks have the flexibility. I think it also teaches you to learn about companies, and again, it's immediate income if needed, and it's just easier to take money out when you need it. I don't think there's anything bad when it comes to going both routes. It's just one I believe is a little bit easier and riskier, which in my opinion, I think stocks are a little bit riskier or real estate, depending on the time. Obviously now you don't want to buy real estate, but real estate I think has a less riskier downtrend moving forward because everyone needs a home. It's an asset that you have physically, and I think that's okay. But I was listening to Dave Ramsey, and he was saying that he believes that real estate's better, right, than the stock market. And he was saying that real estate internal rate of return, that there's three factors to think about: increase in value, cash flow, and depreciation is one of the biggest perks when it comes to real estate, which stocks do not offer. So
Yeah. Good points, man. And one thing that I'd add when I worked a job, I would rely on the experts, right? If you are looking at stocks, financial advisor, if you're looking at real estate realtors. Now, doing this myself, I would highly recommend people do their own research because most of the issues or most of the stuff they push is very self beneficial. So, have you met a realtor, Mark, that says don't buy a house right now, just wait?
absolutely not. Well, I have a friend, yes, but
No,
most
not
people,
friends.
yeah,
Like I have people
yeah.
in the Discord that are realtors. They're like, Mo, just chill. You're not buying a house. They told me in Jan, they're like, just don't touch anything. Just wait. And like, I feel like I haven't met, like, of course, I have family too that they're realtors and they'll tell me just wait. But when I was in Dallas, you interact with different realtors. Same thing with Florida. Just buy now. Buy today. You don't know what's going to happen tomorrow. It will probably go higher. So do your own research because like think about how much would they lose by saying no to you? They're gonna lose commission, right? And I'm not
Yeah.
saying that about every realtor, but I do think majority people, any level of business, if it's benefiting them in case they're getting commission or they're making money profits off of it, they are going to recommend it. You just have that in the back of your mind.
Of course, it's like a car dealership when you go to a car. This is the time to buy a car right now. You have to buy
Yeah.
this car. This is the cheapest it's going to be. That they're gonna do that. Just a pivot, also, by the way, is when it comes to real estate, because I know a lot of people want to buy an additional home as like an investment property for Airbnb. And I want to talk about Airbnb here real quick because you and I think we had that conversation as well. You think Airbnb is going to go to shit, right?
Well, I think that as recession, I'll give you my logic. As recession goes, people are going to cut expenses. So if someone does need to make a trip, it is going to be shortened. And hotels, anything under 7 days, hotels get used. Anything over 7 days, Airbnb get used. And because you're staying for a short amount of time, Airbnb charges the other fee. What is it? Cleaning and all that other stuff, which it's cheaper to rent hotels. And like Like when I was in Florida, like just buying groceries and all that stuff, it's just not worth it. Like when you're going for a short trip. So for that reason, I think a lot of people will stop traveling, and the ones that do will do it for smaller duration, which means a lot of business from Airbnb will move to hotels, but hotels will lose business too. But I think Airbnb go down.
Yeah, yeah, the stock definitely I think is going to go down because I've noticed that as well. It's really weird because now Airbnb, when you go into Airbnb, seriously, guys, just go there, look at Airbnb and look at the hotels. They're pretty much almost similarly priced now, but where before it
Yeah.
used to be where Airbnb was significantly lower. But the reason why I'm mentioning Airbnb, which is a huge factor, and you may not know this, Mo, because you don't live here in the States, but a lot of cities are now banning Airbnbs in certain areas. Like in Orlando, you're no longer allowed to have Airbnbs in the Orlando area. That's why you see the Airbnbs on the outskirts of Orlando. In Las Vegas as well, from my understanding, in Las Vegas, you can't have Airbnbs anymore because people were coming and buying so many properties and turning them into Airbnb that ends up skyrocketing like the apartments and rentals that a lot of people can't afford it. So I think there's going to be legislation that's going to go down the line eventually that's going to ban and make it more difficult for Airbnb to operate. So the individuals who are buying properties specifically for Airbnb, I think are going to have a very rough patch moving forward in the future. And that's why I would not bet on the stock Airbnb because of all the implications that are going to come down the line when it comes to Airbnbs.
Mark,
So
the selling hasn't started yet. I know we're down from 4,000 to 4,800 to now 3,700. We have a lot more room to go. I think we got another 700 points to go.
yep, yep. But people won't see that for the next couple of weeks probably because it might be a bull run. So we'll see. But that's pretty much it, Mo. Do you have anything else you want to cover?
No, but I want to let them know that next week's pretty big for us, and we have Mark, right?
Yep. There we go. Boom. We got Mark coming on next week. He's going to be here live. So we're going to shoot on Wednesday because Wednesday works best for him. So make sure you guys stop by the 26th of October at 6 p.m. We're going to have Mark live here on Money Market Truth. We're going to talk to him about various different things, stocks, VC, as well as some of his optimism that he's been pushing out there on Twitter. So I know some people have been a little bit angry with him and stuff, and I know he has addressed it a few times, but we could definitely just talk to him about several things. So make sure you guys tell people, share, let everyone know that Mark Monroe is coming on our show next week, which we really appreciate. So
Awesome.
yeah, that's pretty much it, everyone. All right, everybody, thanks again for tuning in. Remember, like, share, subscribe. Until next week, peace out.